Where did you wait, where did you find this person? Was it in left curve?
Yeah, he's an OG left curver still in there. And yeah, he's basically yeah, one of my best friends.
Nice.
And so like I think it's also really important to have somebody like this, like chatting like a lot, asking stuff, doing some sort of research together and everything. And honestly, if it wasn't for this guy, I wouldn't be where I am right now. But a really good server helps a lot.
How important is it? How important is it to just remain a student? And are there any patterns you see between like people in the server where it's like the people with a big ego don't want to ask questions, think they know it all, tend to underperform compared to the people maybe that have no ego and ask questions and remain a student all the time? Is that like a pattern you've seen pick up, or any examples you could give us without like name dropping, of course?
I think somebody with a big ego and like even like in combination maybe with not dropping a lot is not gonna survive for very long in the server. On the other hand, I think I'm totally fine. Or I think people who are always willing to learn, always looking to be active, be there when times are not good, even if it's just for an occasional chat or for outside crypto topics. Like these guys will survive, and they will actually be successful in future, I think, more so than people who think they know everything.
Yeah. Do you want to do we want to jump into some charts, man? See what you're looking at these days, what you're excited about. I saw you were posting about Avicii, man. Are you big into the whole the MetaDAO narrative?
I'm not actually sure if I ever posted about Avicii, to be honest.
No,
No,
I feel like I saw it
no,
on your Twitter.
no. Actually, I think no. So I have a confession to make. So I was thinking about this the whole week, but I just thought like, okay, we're just gonna float here and see what happens. I mean, we can look at charts, but as you may have already also seen, I have not been too exposed to the market in the last 2 weeks, and I have also encouraged a lot of people in my surrounding to take a step back and refresh their minds, because yeah, I mean, we all know what happened on October 10th, um, but I just think it's not the best time to be like very risk on, in my
Can
opinion.
we talk about that for a second? Because that's actually I was just about to jump in and talk about that, because I think that was one of the tweets I might have actually like quote tweeted or
Yeah,
retweeted
yeah.
that tweet. I was reading that and I thought that was just a really interesting position to have right now. And I'll share the tweet right here. Um, you basically said patience wins. This part of the market isn't about catching every move, and the
Chill.
part. Yeah.
1 second, let me pull your screen up. Sorry. Go ahead.
Oh yeah, oops, my bad. I didn't pull my screen up. Here we go. So here's the tweet. Patience wins. You said this part of the market isn't about catching every move, and the part that really stuck out to me, and that I'd like you to kind of expound on, is this part here. Whatever you miss, whatever you miss now being cautious, you'll make back easily when the market flips risk on. So kind of walk us through your thoughts and like kind of what made you come to this conclusion, and kind of bridge that into how you're thinking about the markets right now.
Sure. To be honest, I was kind of hoping we talk about that, because it's basically like the main thing that concerns me right now. Um, First of all, we know like the market right now is not really good. Obviously, if let's put it back to this specific day, October 10th. So if you were somebody who caught like in this very short time window, if you caught some of these dips, obviously you'd be up tremendously. Yeah. So that was a good dip buying opportunity. The next morning already, in my opinion, already is like not the best time to expose yourself so hard to the market. Um, this has some like what happened has some really big implications, in my opinion, for crypto. Um, One thing is obviously the industry we all thought was like kind of grown into this institutional bit kind of industry, like grown up, you could say. It was now happen like what happened. It's kind of, we all thought now this wouldn't happen anymore. It was kind of crazy. So I think many people lost a lot of money. That's the first thing. I lost a lot of money, not too much, but like 20% of the port. and I know many other people have felt the same. So confidence in the market is at a low, and I think when confidence is at such a low and the market is basically not really trending, we have a situation where I think bids are happening, but a lot less volume. And also, what happens is people are trading with like a trading view on the next window, and they are watching the BTC 1 minute chart. Like, okay, so I bought this shitcoin, I'm up 10%. Now BTC dumps like 1K, like nothing, but it dumps 1K. Okay, let me sell this on all the other heads. This is something that's happening, and I think right now these are not the opportunities that make me money, like I can start bidding all the shit for like 10% and 20% moves, but it's not really making a real impact on my portfolio. There's obviously the risk that I lose with all these trades too. It's also a lot of micro decisions I have to do all day, like, do I have a good entry? Should I buy? Should I sell? Where do I TP? What if this happens? What if that happens? Like, so many decisions. And basically I will not have like real impact on my port. So I think basically for this reason, it's the best to just sit on your hands, refresh your mind. Let's assume I could have made like 3, 4, 5K, like any non-meaningful like amount of money in this time window, but I could have also bled myself to death, what happened many times before to not only me but to any like to a lot of other people too. So I'm just trying to avoid that and trade a trending market. So either we get really meaningful levels, like let's say ETH fills the wick, so where we could assume we will see 2 or 3 weeks of a uptrending market, so on-chain will revive like a little bit again. So this is what I would then trade, but I would not like we all know that when you are in the zone, when you got a really good time window to trade, what I do, like what I make in this kind of market is like 50 to 100x better than what I can do in this kind of shit market when I trade.
So you're saying when the market's not trending, you're better off just sitting on your hands rather than getting chopped up and wrecked basically for the weeks or months the market's just not trending.
I think there's something else that's playing into this, and it's we are late in the cycle. I don't know what happens next. I mean, we all hope that the bull market will like go on, and I'm fairly confident it will, but I don't know. What if not? And
Can you get into your cycle theory or just like how you've thought about cycles in the past maybe and why you think this time may or may not be different?
to be honest, I don't. I'm all I know is that we are 4 years into the cycle. We are basically, this is what was happening in the past. So 4 years, and then we'd get a bear market. I don't know what will happen now, and I'm not like I think I don't really want to risk it. Like I'm just doing what I get. Like the cards I'm being dealt. I'm not saying like I will also trade in bear market. I will be active no matter what. But I don't know what happens next, and I think you've shown here the tweet I posted, and I think you don't really have to be a chart guru to see that the weekly, like the 50 weekly EMAs, always held up in the uptrend. It's a level I'd watch definitely, and if we break it, I mean, it's a psychological factor that many others will consider too if it's gonna break. So then I'd start to be actually bearish. Yeah.
Nice. I actually have like a very similar take. We were actually just looking at that exact indicator just before you got on. So my question is though, so you're being patient now. You're recognizing, hey, look, post historical liquidation event, confidence is at its low. Even if you were to win, it might not even be a meaningful port W based on how choppy market conditions are. Maybe you get a good win, but then you get another loss, and it's just not meaningful, and it's net negative. So knowing how quickly on chain can move, like at what point do you get aggressive? At what point do you say, okay, now is the time to jump in? Like, what's your parameters? What's your setup look like that kind of allows you to change when the time's right?
Yeah, I think the first one I already kind of talked about. That would be when we get a really like meaningful pullback again, where I'm not looking like currently. I'm taking ETH for example. I mean, we're like at 3.9 or so, 3.8. I don't know. I'm not sure. I think it changed a bit.
4.
Oh, 4 already. Okay, so
Mhm.
we made some kind of move. Okay, but for this whole, I mean, since the liquidation event, I think the whole time we were like, if you didn't happen like to catch the bottom of the wick, I mean, 3.6 was kind of the lowest then. That was actually kind of, you could think about jumping in there, like buying some spot ETH, and looking for basically not more than a 10% move. Because like the 4.2 level on ETH is, I think, is pretty important to flip this. So if we flip this level, for example, I'd look for like also some more exposure on chain, because then we would have an uptrending market again. So I mean, we flip that, then we are probably looking to target all-time highs again. And also, I think that's a big confidence level in the market if we got this. And we like currently there's the fear, okay, maybe like let's reject another time at 4.2. We'd be probably looking or considering like targets to the downside. And this once again would kind of be really bad move for confidence in the markets. So either we get like 3.3 or even like 2.8 ETH, like in a short time, not like chopping down, then I think that's probably a good time to get some exposure, because we'd be probably having some sort of like trend up to some meaningful resistance levels again, but they're probably higher. Or flip 4.2 and the bull continues and we get some confidence back. But well, I want to just note one more thing. Currently, since I already said, like, I don't know what happens next, I don't care. Like, I care what happens next, but it doesn't really change what I'm about to do. Whenever we are in a market like this, I'm trying to get like gratitude over greed, you know. I've seen people saying like max long now, and I'm sure many of these people will be bleeding to death because they will act out of greed, you know, taking too much risk to make up for what they lost. I think I can say that I did 200x in 1.5 years now. I was even a little bit
Wow.
higher. And now I'm trying to be really like, I feel gratitude that I made this, like that I took the step to go into crypto to get myself in the position I am now. And if the market was, if the cycle was over now, man, I'd be looking at a figure I didn't believe even half a year ago, and I'm totally happy with what I made. If we get other chances in the market later, I'm going to take them for sure. But I'm just saying to everybody, like, don't risk too much right now. Even like you can punt some stuff. I did too. I got like 2-3 positions running right now with lower kind of confidence because of the circumstances I said. But like the position size is like 1/3 or maybe one and a half or something like that. You know, like I think it's a mistake to be too risk on right now.
What about perps, dude? Are you trading any perps these days? Or you said you got 20% of your portfolio wiped out. By the way, sorry to hear that. Was that due to trading perps, or how did that look?
Okay, no, I don't trade perps. I think for me it's also some sort of like I I know that there's like beasts in the market, you know. There's people that will crush you, and I think I see so many people who, when no, they don't have a clue what they're doing, but they still do it. I don't want to be one of those people, you know. So I'm kind of want to learn it, And whenever we got like a really like dry period in the market, I got some cool stuff where I can learn it. I have some material that's pretty good. But I think it takes just a lot of time to master the art of perps trading, and I'm not really willing to expose myself to that field. Um, I'm I may be doing it like with like, yeah, I would say like small amounts of money, like let's say like $50 or so. So something that wouldn't hurt to lose, just for the feel, but I'm not really interested right now into perps.
Okay. I want to kind of run back to something you mentioned earlier. You said people aren't grateful enough. There's not enough gratitude. I think one thing I see on Twitter also that's just, it's so peculiar to me is that people have lost touch of how much money is a significant amount. And of course, it changes based on where you live and your circumstances. But, you know, we see this conversation going on right now about, oh, how is Kobe not a billionaire, right? Kobe just sold an NFT for 25 million. And it's like, some people just don't get how much money that is.
Yeah.
Do you think there's an issue right now with Twitter just kind of making it seem like everyone should be making so much money, but in reality, it's just such a small fraction of those people who are actually doing it at a high level?
Well, I think it's kind of an issue. I'm pretty sure a lot of it is shit talking too. But yeah, I mean, we are so delusional. Like the industry is so delusional. In a sense, like I tell myself, in a sense, as a trader, it's good to kind of lose the perception of money a little bit. You know, just to make an example, if I do a trade and I lose 10K, you know, or I risk 10K, or let's even say 1K, okay? So, okay, I'm aping something for 10K, I'm like 2K down. Um, if I really see that money as what it's worth in buying power, then I will just constantly be watching the 1 minute chart. And, you know, I mean, it's kind of important to lose a little bit of the perception of the money in this case, in this sense, you know. But
When you say in terms of buying power, do you mean like, oh, I could have bought this watch, I could have bought this car, I could have bought this, so on and so forth?
yeah, I mean, the amount of like, for example, when Sol shitcoin season was hot, yeah. I mean, I do like spend free Sol, like let's say $600 in a coin where I'm willingly let this go to zero if it happens, you know. And $600
Yeah.
is like, what the fuck? Like I could actually buy some stuff for that. But in our terms, it's just okay. It's just free Sol. Fuck it.
You know, it's funny. I had this conversation with Chili the other day too, and that's kind of what I said. Like, I'll have my size in these positions, and then I'll have these small positions that's up. You know, and again, this is going to change based on like your circumstances, but I'll have these small positions up $1,000, couple $1,000, couple $100, and I'm just like, even though it's at a good level to take profit or maybe start scaling out, I'm like, well, the dollar value's lower than I would like, so I'm just not going to. And I think you have a good point. I think it goes both ways. Just being able to detach from the big dollar amount swings, and the low dollar amount swings is important, and just trade on a strict regimen no matter what. And I find myself still having that issue too, where it's like if it's not big enough, I just won't touch it, won't take profit, won't really look at it. And like you said, when you put that in perspective, it's like, whoa, well, you know, $1,000, I could buy a new couch, right? Or maybe not a new couch, but
Yeah,
yeah.
but that's why sizing is so important, man. Sometimes you buy something, you put in like, okay, let's say you put in a small amount, yeah, you do 5x, yeah, you can't be happy about it. It's
Yeah.
just so it's really important to size well. Obviously not in shitcoins, like in gamble shitcoins, pump fun that you get sent in the group chat and you ape for fun. But yeah, if it's like when we're talking about actually like investments, it's really important to size. Yeah.
What's your rule of thumb? What's your rule of thumb there when it comes to sizing?
So the question is not really too easy because I think like 10% for like some conviction back is something I'd go for, but at the same time, when in the short amount of time your portfolio like swings so high to the upside, um, these values change so fast. So I mean, I started with low four fix, you know. When you do that, um, like in your first months, you know, and then we're talking about a few hundred or maybe $1,000, yeah. And like soonish it was like 10K and then 20K and so on, you know. And it's I think whenever it changes so fast, you should not apply this rule of thumb because kind of you have to get used to the portfolio size first before you actually go back to this 10%, for example. So I think whenever you have like a big win that meaningfully changes your portfolio, sometimes, I mean, let's say you aped 10%, the 10% back of something, it did 5x. I mean, that you made 50% on the port. So whenever something like this happens, I did the mistake before. I was also sizing this up because now you got money now, and you think, okay, now I'm gonna play with the big boys.
Little confidence.
Yeah, confidence, overconfidence. I actually made a
Mm.
really a post on that too that some people really liked, where I was sharing some of my mistakes from overconfidence after big wins. It just happens, yeah? And I think that now my learning is start a little bit slow, keep around the same position size, but actually I have to admit one thing, it's a lot of balls tingling. Like I don't have set position size, you know. I mean, it's always the question like, is whatever info you buy something on, is that a known info? Are you maybe the first to really see that? Are you the first who's talking about it? What is actually like happening after? Is it a good narrative and all these things? So if a lot of boxes check, man, blasted. And then yeah, it's a lot of balls tingling.
So do you do any journaling? And I do want to ask you just a little bit about, like, what parts of the market you're interested in, and kind of get your ideas there. But before we even go there, I wanted to ask you, do you journal? Do you record your trades? Do you go back and kind of see where you messed up or where you could improve? What's your approach there?
Yeah, so I I think journaling is a really good thing. I'm sort of inconsistent doing it. I actually set up a journal with ChatGPT in the project section, which is pretty cool because it does like all the work for you, and you just type whatever you feel, and it's like it can really do some cool stuff. But yeah, I'm kind of inconsistent sometimes in doing it. So I'd say I'm not the greatest journal guy, but what I do and what helps me actually most is expressing my thoughts on Twitter. It's like a journal for me too. I mean, I'm obviously not talking about like specific sizes or trade, like when I entered TP levels and all the stuff. Obviously, I don't do that, but for me, like what helps me most in journaling is actually like the psychological part, and the part when it's about emotions. So
Got
yeah.
it. Yeah, me and Dom had this conversation around journaling the other day, and I recently picked it up, and just it definitely helps from the psychological side of things, and just kind of helps you keep track of things. But I'm also finding that I might not be the most consistent daily journaler, but I as well use Twitter as a bit of an outlet to kind of express my feelings
Chill, can I ask, like, if you're about to write something on a piece of paper, like, what do
yeah.
you write? Are you writing like, oh, I placed this trade at this price, this was the outcome?
So
Do you write it when the trade is open, or do you write it when the trade is closed? Like, what does it actually look like?
beforehand. So like I have a typically, I'm sure Jones, maybe you do something similar. If I have trades that I want to take, or a thesis on the market, like now the thesis is ICM, we're early. I'd write down, okay, look, these are the tickers I'm interested in, and then I'll just check the charts regularly. And you guys know the red boxes. When it hits a red box, bang, entry. So I try to plan it out and then act, versus on chain is so it's an arena that's constantly changing. So sometimes you have to make those decisions, and like Jones mentioned earlier, sometimes you're just tingling and everything just checks the boxes. So there's definitely times such as those. But yeah, Jones, I mean, what parts of the market right now would you say you're most interested in? Or when things do kind of flip for you and you flip bullish, what are you going after first, or how are you looking at that side of things?
So I think first first of all, I have to say currently like I actually did what I said. Like I even pulled myself a little bit out of the market and didn't check stuff like too eagerly for some days. So I'm not like up to date with everything, but I can even tell you for the current market. even when things don't check out like as I wish they were yet. But I think I want to have a look at all the stuff that either is a hot narrative or has a catalyst up front. I mean, these are the trades where you can't do a lot wrong. So I don't have a lot of positions open right now. What I do have open right now, some is in the prediction markets matter, because obviously this is a huge narrative right now with Kalshi and Polymarket kind of raising big right now, having an IPO somewhere in the next 1 to 2 years. I mean, it's it's kind of far away probably, but it's something that people just like to talk about. And obviously, prediction markets is also something interesting in terms of will we have a bull or like a further bull or bear? Because I think prediction markets is something that many might actually transfer over to when the on-chain markets are dry, because there's always something to bet on. Like, this doesn't have anything to do with like charts going up or down. I mean, it's just basically it's a yes or no question. So I think that's something that is really worth having an eye on. So I'm just gonna share my only like, okay, got two, but one is a shitcoin. The only position I have right now actually in this meta is Pretty, because we got limitless TGE upfront. Not this one. The one on base.
What's the
The
ticker?
one on base, PREDI.
Oh, pretty, yeah.
Yeah, Pretty. So first of all, obviously chart when I bought was clearly bottoms. I mean, it can always go more down. But I think this one just checked out for me as something I'd be willing to put some money in, because we got, as I said, limitless TGE base related coin. So it just simply made sense to ape a prediction market coin on base. Actually, also one that, like, the numbers are increasing. It's not like huge, but people are actually using it. Grok is also using it. So I think has some good people who are aligned with the coin. So there was
What do you mean when you say Grok is using it?
there was actually somebody posted it. Grok made a prediction market with it.
That's pretty
That's
crazy.
actually kind of crazy, yeah.
Wait, I show you. Wait. Wait.
I mean, now we have
Do
AI.
you think
Hey guys, GICM. That was pre-show by a conversation on October 22nd that we had with Jones Rita from Left Curve. Wild conversation on down market days like today. I think he basically said after October 10th he was feeling really risk off. Excuse me. Yeah, so he was feeling pretty risk off, and his portfolio had taken a decent size hit from the October 10th drawdown. And anyways, we had him on, and he was talking about kind of just using lower size, using only half your portfolio or 1/3 your portfolio of size to trade. And on days like today, I think like that's super timely advice. So definitely go back and watch that segment with Jones Rita and just kind of get, a fairly professional trader take on where we are in the market cycle. But yeah, he felt like it was kind of near a cycle top. I wrote some notes in the replies, and I linked a thread of a key EMA level that he mentioned that he was watching on Bitcoin to be fully risk off. Excuse me. So yeah, I thought that was super interesting. Today we have BMB Network joining the show, and they will be on. John will be on in a little bit. So we will wait for that. And I'm just trying to get my background updated. Apparently the dark version is, what do you guys like? Do you guys like the light or dark version? If you have a take on that, please let me know. Yeah, let me see if I can pull the notes for this Jones Rita interview. I actually had some really good notes in the replies, and I think on days like today, these notes are like super timely. Oh, hey Dom, how are you doing?
Doing good, man. I gotta figure out this camera. I feel like I was toying with it the other day, and now it's making me look weird, dude.
Dude, that Jones Rita interview,
Oh well, huh?
timely. Not gonna lie.
Oh, there we go. Okay, cool. Yeah, man, we got BMB on today. How you doing? Man, this market's crazy.
Yeah, I'm good, bro. This market is a little wild, to be honest with you. But yeah.
Yeah, dude. Yeah, man, Bitcoin's just giving us no breaks here. Like, Believe obviously had a very uneventful launch, flywheel launch, and then pair that with Bitcoin dropping 2% in the day. It's just can't catch a break, dude.
Yeah. It's looking a little rough. This is kind of like you got to know what you own kind of moment, right? There's some conviction bags you had. Again, I was just saying just before you joined, like Jones Rita was talking about using 1/3 or half size on trading. So I think, if you're going to size into anything going forward from this moment on, definitely sizing down is probably the go for a little bit.
What's the reasoning there?
Just because after October 10th, he felt a lot of like people got wiped out, and people were going to get chasing, and just people had trading view 1 minute Bitcoin candles open, and everyone was just kind of like max exposed and max kind of chasing the market. And he said that he was watching, like if ETH couldn't hold 4K, I think he like had like 2,800 as a potential target. So I'm
Let me pull up macro charts real quick, and we got 4 minutes.
Yeah,
I'm not sure how much do you know about BMB Bulls?
a decent amount actually. I've been on a space with John before. I don't know if this startup is relating to that, but it's kind of like an AWS for gaming. But a decent.
Okay, your mic's a little patchy, by the way, but not too crazy. Yeah, dude, I don't know. Again, we're still in this. It's crazy to see Bitcoin doing so poorly when you have stuff like the Dow Jones, US 30 at all-time highs right now. What's gold doing? Gold's up a good bit today after a tumble though. Yeah, but all equities, look at these indexes, right? All basically at all-time highs, just nothing but straight up. Again, I feel the sentiment that I'm in the wrong market right now, or I've been in the wrong market for the last, call it, year. But it's okay. Maybe we follow gold here shortly and Bitcoin kind of reprices. But until then, we're in a interesting spot. You wanna? So yeah, I don't know if I really have much to say on this Bitcoin chart or macro. I would just say I'm kind of in the boat now that's expecting maybe one more test down here, and that's potentially our bottom, or maybe similar to what Jones is thinking is just roll over and come down closer to some of these zones.
Yeah,
which I
and
don't want to see, but
really quick, I'll just flash back to the recap of the notes from Jones before we pull John up from Beamable.
sweet.
But he was saying, seeing potential signs from the October 10 flush, the key levels that he was looking for is looking for ETH to reclaim 4,200 if to get back to a trending market. If not, bearish thesis was 3 to 2,800 on ETH. So he's definitely seeing that as a pullback. And then thoughts on sizing was 1/3, 1/2 position. So on days like today, where you are seeing kind of the market flush out, I mean, this was timely advice. This was October 21st. So, a week and a bit ago, he was giving this advice. And, of course, if you watch MCG, you saw that. I'm actually going to go ahead and retweet this because I think everyone needs to just get this information. But yeah, with that, we have John from BMB coming on, and this is Compute Capital Markets. We're talking about gaming, which I'm super excited to discuss. But let me get BMB, friends of Meteora, potentially, I believe. So add John to the stage. John, what's up?
Hey guys.
John, how we doing?
Well, a little overwhelmed, as you might imagine, because we're doing a token launch starting next week. So that's pretty crazy, but having a lot of fun with it. Just not a lot of sleep.
Let's go. I listened to your spaces with the ICM.run crew, the Meteor Collective crew. You're a great speaker.
Thank you. That's nice of you to say.
Yeah, dude, we're excited to get into it
today.
Hash it out. We kind of always start with just background, John. So if you want to let us know your background, how you got into this, how you became this big compute guy and created this big BMB network, we'd love to hear that.
My background is kind of divided into two big areas. So one is I've been in web development tools. So I started a company called ePrize and took it public on NASDAQ, grew it to a company of about 300 people. So just solving ways for people to get their websites up faster is what it comes down to. And then did something completely different, which is I started a game studio. And we built games based on things that you all have heard about. So Game of Thrones and Star Trek, Walking Dead, Archer. So we built those games, shipped games to 20 million people. Wow. Built one of the first blockchain games there. We didn't call them Web3 games quite yet, but we built a blockchain edition of the Star Trek game in one of the early gaming chains, minted 1 million wallets there. So had both of those sides. Personally speaking, I was mining Bitcoin in a JavaScript program that I embedded into my blog like back in 2011. So I was pretty early to crypto, but really didn't start building around it until that blockchain game I just described. But that's my background. I guess we can save the rest about where we go next.
Very cool. Yeah, and that's a pretty awesome background. You have tons of experience shipping some of those games. It sounds surreal.
Yeah, I want to, sorry, Dom, to cut you off. I wanted to ask actually your take on how Web3 gaming has evolved. Because actually, I was on Spaces with you back in the day, discussing this with Jonah Blake, and Jonah and I are business partners. But yeah, just want to hear kind of your take of how you've seen it evolve. And Dom, sorry for cutting you off there, buddy.
Sorry.
Yeah, I mean, it's a category that's really struggled, frankly. I think that's no surprise to anybody. I think a lot of teams got started on this without really knowing what they were getting into. The games that I think are going to have the most likelihood for success are mostly game teams that have worked together on pretty big game projects before. I think the thing to understand with Web3 is it's fundamentally a business model. It's not really a kind of game, right? So that's kind of the challenge there, is no one's truly cracked the code on the business model yet. And onboarding into that business model, because it's built around a crypto economy, is not like a total slam dunk either. So we have great Web3 developers on our platform. So Mythical Games with FIFA Rivals and Pudgy Party and Project O, Wildcard Alliance. Like, these are some really, really capable teams that frankly have been in the game industry for a while. So I think we're going to see some successes because these teams are super competent. But I think it is going to take a while for Web3 to emerge as like a big category. Because when we talk about gaming is about a $200 billion a year consumer market. Currently, Web3 games are pretty tiny, less than 1%. I mean, frankly, even like 0.1% kind of piece of that market. It's not to say some of them aren't going to blow up and become the next Call of Duty or something, but it'll just kind of take time to uncover those, which, by the way, is exactly why when we built Beamable, though, we knew that while supporting Web3 game developers was going to be important for us, especially given that we're pretty crypto native and understand the tech behind it. It's been a great niche for us. But really, this market and what we're thinking of as compute capital markets on Solana, with this focus around gaming, at least for initial foothold, it's got to be able to go after all game developers. And I think that's kind of been the misfire a little bit for a lot of game infra tech that has tried to tokenize around like Web3 only, in that it's just too small of a market today to sustain a game tech company. But we started as a game tech company 5 years ago to help any game developer, on-chain, off-chain, free-to-play, premium, subscription. Like mostly those games share 95% of the same technical requirements, which is they have to have a lot of back-end compute. And that's the problem that we've been solving for. So a game, as it scales up, needs game servers, orchestration, social systems, payment systems. All of these things are kind of the same across different genres. And so we took a horizontal approach. And that's kind of how we have been building the company so far. And we've got roughly 100 games that have launched on the platform. So it's also real and operational, and 2.5 million people played the games on the network last month, both Web 2 and Web 3. So that said, like where we're going is like in gaming, for those of you who've been following gaming, there's been almost this hackneyed phrase of we got to onboard game developers to Web 3. But what you're saying is that you want them to change their business model, which is a tough sell to most game studios, frankly. Our pitch is, well, we are onboarding all of you game developers to Web3 by making your infrastructure priced much better, doesn't go down like it did in the Amazon crash last week, and it's built around an open ecosystem that anybody could use. You build your game however you want, free to play, blockchain. Like, we wish you success, whatever your business model is, but change the infrastructure and be more sustainable, because game developers spend like 20% of their income back out on this infra.
So help me understand this. You're basically building compute capital markets, if you will. You're building decentralized compute, and then your main target audience right now just happens to be gamers. You started in gaming, and now that's your audience for this decentralized compute that you're offering.
Yeah, that's right. So the premise of our compute network is that if you can subdivide compute down into tiny, tiny units, you can then distribute it over a computer network, right? So Beamable's tech, we call them microservices. Each invocation of a microservice is what we call an API call. So it's not really about leasing and provisioning individual computers. It's about gaining access to compute capacity. You can almost kind of draw a parallel to energy markets, where like you can have a solar energy panel, you can sell energy back to the grid. Well, in this, you have computers that are connected to the internet. They generate compute, which all these games are basically just, they need that to grow, and you can gain access to it in a decentralized way. And what blockchain brings to the table is these subdivisible units of compute are wrapped within an asset structure via blockchain that allows us to price them, have market forces that shape pricing. And if servers go down that supply that compute, it's really just a rerouting problem on the network, as opposed to your whole game is shut down. So that's kind of the premise behind compute capital markets as we've thought about it. Now, why gaming? Gaming has some of the spikiest demands out there. Like a game, when it launches, it can need 1 million players to play that game, and then it has to be able to deprovision rapidly. So that's actually where an aggregate network built around these subdivisible unit of compute is really, really valuable, because you don't have to think in terms of, I need this many computers. I just need this much compute thrown at my game as it scales up and down. So that's one aspect of it. And it's just a great use case for proving out the network. And the third is, I'm a big believer in, you look for dense networks of customers that talk to each other. And then when you win them over, they're all telling each other about how great it is. It's really hard to do that on a horizontal basis. I think that's why some deep in compute networks struggle somewhat because they're just so horizontal that they got to find any customers that can exist instead of building a foothold with a category of customer that trusts you, and then you grow out from there. Aspirationally, we want to grow into lots of other markets with our compute network, but gaming is a great market. We want to be known as like very high uptime, economic, reliable, open source, open ecosystem, and then we will grow out from there. But frankly, it's probably years down the road, because the gaming market, when we get outside of Web3 and you look at the entire gaming industry, they're spending billions and billions and billions of dollars on compute and infrastructure. It's a great market for us to go after. We don't have to go outside of that. We can be much more efficient being kind of dominant in that category versus just try to be all things to all people.
There's a reason why when Jeff Bezos left Amazon, he put the head of AWS as the new CEO, and AWS was a massive revenue driver for Amazon and arguably made it into the $1 trillion company that it is. So help me just understand from a computer standpoint how this works, because people, I guess, choose AWS because, they're a single provider. They have massive centralized data centers that, you just know that if I pay my subscription, it kind of works. Of course, except for last week when it didn't.
Yesterday when it did again.
Yeah, maybe yesterday when it did again. But I think when people think of these decentralized, depend compute networks, just they're not as reliable. Like you have like indie people who are like, oh, I got some graphics cards over here, I put it on the network. Like, can that really replace an Amazon Web Services for game with like 1,000 concurrent users or something like that, or even 1 million concurrent users?
Yes, because when you add enough compute capacity the way we're doing it, it doesn't really matter. It matters. So if all the servers started going down, it starts to be a problem. But in general, we're looking for people who add compute capacity that can offer 99% or better uptime back to the network. And then when you aggregate that across many providers, your effective uptime is actually then much better than 99%. It's 99.99%, because you've got so many routes that you can go through to obtain the compute that you need to throw at these applications.
Right. So this isn't like Josh with his old ETH mining rigs and GPUs providing compute. These are kind of professional people that understand infrastructure, that are like, okay, I can give you this amount of, I don't know, what do you call it, megawatts, or what's the unit of measurement?
I love the comparison to the energy market. This is sort of like how we think of it. It's not watts though. It's what we call API calls.
Okay.
People price and API calls are sort of an average of compute that happens over the network. We did 10 billion API calls last month. So there's a lot of, and so you're kind of asking architecturally how it works as well. So there's worker nodes, there's checker nodes. Worker nodes are the compute providers. So they're the ones that actually respond to and serve up API calls. And they enter into an order book what they want to price their API calls at. Games decide what they're willing to pay. There's a matching process where we find a market equilibrium price. And then the game is happy because they're getting all the compute that they need. The worker node is paid in BMB network token, which is the principal use of that really is as the medium of exchange and the node incentive mechanism across the network. And then we have checker nodes. And checker nodes have the job of essentially validating transactions, making sure that everyone's playing fair. They can approve payments to worker nodes. They can slash a worker node if it looks like someone's cheating. So those are the two types. The big difference between them is, you're right, worker nodes are not your retired ETH rig in the basement that was sitting around. That's going to be data center capacity. So that's, there's hundreds and hundreds of data centers in the world that are secure, high performing, and that's kind of the target market for worker nodes. Longer term roadmap, we do have a lot of ideas around how you allow, say, lower quality compute to join the network as well, for lack of a better term, because there's actually a market for lower quality compute. Some people would be willing to pay a lower fee to get access to less reliable compute. That's a little bit down the road for us, at least initially. Worker nodes are concentrated at the best data centers in the world. Amazon, by the way, welcome to be on it. They will be one of it, but also like what we call bare metal service providers in this market. So these are companies that have created data centers that sell that capacity typically directly to customers, B2B customers, but then they have a lot of underutilized capacity that they can add to the network. The difference with checker nodes is that's commodity hardware. You could throw that, you could, any Raspberry Pi that can download a Docker image, you could run it off that. So that old ETH mining rig, probably perfectly fine to do that with, or you could even just run it in the cloud. We've teamed up with some node as a service providers like NodeOps and Imstones to be able to run it for you if you want to do that.
Yeah, and so you've convinced then both data center providers and game developers that this is a good idea and that Beamable can overtake Amazon. That's been a successful kind of like, how's that conversation gone usually?
Well, game developers, this is one of our unfair advantages, frankly. And you ask like why games, why kind of focus on a specific vertical out of the gate. And that's because we've got a 5-year history now working with game studios, everything from small indie startups to some of the biggest game publishers in the world are already launched or building on Beamable. So we have those relationships. We've established that trust. So, and we're also continuing to add more customers. Like a game is shipping on our platform like once every week or two. So we've got that pipeline. We've got people using it. The way most game developers work, though, is they don't want to know anything about blockchain. They don't want to know anything about wallets. They really don't want to know anything about a cryptocurrency. So that's where we've also made a big investment in making it easy for them, right? So if we think of the way the network is structured, there's a demand side and a supply side. So the demand side is those game developers, and you have to make it accessible to anybody. So our solution for them is they download an SDK from us, and game developers mostly use one of 3 technologies. For anybody who follows game development, it's an engine called Unity, an engine called Unreal Engine, or they are just building like a web browser based game. Those are the 3 main ways that like 90% plus of all games are made right now. You download that SDK, and all of the server provisioning stuff to actually gain access to capacity, scale up, all of that, that's just done inside the engine. Like there's a studio editing environment where they actually work on games. And that whole provisioning piece, you don't have to know anything about blockchain. In fact, most people won't even know it's blockchain, frankly. Like they only care that they went to beamable.com, which is the customer-facing site where we say very little about blockchain other than blockchain support for people that are building blockchain games. But in general, it's just generalized platform for game development. They download that. That's all that they need to know. And as long as it works, then they're happy. And we have a history of it working with 99.9% SLAs. Cool thing with blockchain is now we start putting SLAs and performance and reputation online, on chain as well. So actually having an immutable record of how things have gone over time and how worker nodes have performed. So people will be able to fact check us in the future in a way that you can't do with the hyperscalers. Now on the supply side, that's crypto native. That's people that get the token, they operate nodes, they want to earn the nodes, the node emissions rewards, which are the token. So that's the crypto native side, which kind of has its own separate side of things, which is beamable.network instead of beamable.com.
So, John, you mentioned a few things, a few reasons why you're using blockchain. But I guess my broader question would be, you guys choose to use blockchain. You keep it as underlying technology. You don't really let people know. They don't have to know. It's not their business. Like, it's just kind of underlying technology. Why are you guys choosing to use blockchain rails and people like AWS and some other providers don't? What's the benefit there?
Yeah, well, first of all, they can know. It's not a secret, and sure, they're welcome to just access the protocol at a protocol level as well. But as we know, like you start telling developers, hey, here's the protocol spec, like build on it. Like that's a very small percentage of developers will put up with that. So they need the easy SDK, the easy payment gateways, things like that we provide on that side of things. Refresh me on the other part of the question, though.
Yeah, I guess the question is just in general, why even use blockchain? Rather like AWS or competitors maybe don't. Why do you guys choose blockchain?
Well, it's a completely different approach to the market. It's, with AWS and Azure and GCP, which are the big 3 hyperscalers, they own zillions of servers and they essentially lease them to you at contractual rates, and they manage that whole process for you. They're not an open ecosystem. They're not a market economy. So my vision for the future around the way compute is accessed is, instead of being a contract with someone, meaning a traditional contract and a smart contract, it is a market for compute, and you access it as a protocol. So in this future, I think Amazon and GCP and Azure will all be there, just like in the energy markets. There are lots of people who generate capacity and they add that energy to the grid. So ultimately, I think that the hyperscalers will be part of this market economy in the future, but there are going to be many more participants because the market's going to be far more democratized. There's a lot of data centers that offer bare metal server capacity to people today who do not have massive sales and marketing channels like the big three do, and are kind of inconsistent from one to the next. So it's not like if you build in one, it's a slam dunk to switch off and go elsewhere. So for a lot of these other providers, it gives them the ability to take their compute infrastructure, connect into a market-driven network, provide compute, and just earn extra money really from their CapEx investments from the compute that they already were going to have anyway. So I think the market will evolve. The way that you do it, and the reason why blockchain is so valuable for this, is that to go from subdivisible units of compute, which by the way, that capability exists already. So there's things called microservices, or in the case of Azure, they have a tech called Azure Functions. There's something called Lambdas at Amazon. These are basically just ways of breaking down compute into small pieces that can then scale up and scale down according to the demand for those pieces. So we're taking a similar technology from that. In our case, it's called microservices. We distribute that over our network, but the difference is, instead of contracting with it and using like their siloed approaches to this, what we do is we use blockchain to enable that to become a peer-to-peer transaction via the protocol. So when a game provisions access to those resources, it goes directly to that supplier. The compute comes, and like the payment of the game to that supply provider, we aren't in the middle of that. The protocol facilitates it, but essentially that supply provider gets all of that payment. And then there's a small network fee that we add on top of that, just to fund the network, the protocol, the foundation kind of operations itself. So to do that on a peer-to-peer basis requires a way to know that everyone's playing fair. You need programmatic value exchange. It's one of the really magical things that happen with the advent of not only blockchain, but smart contracts. Smart contracts enabled you to have programs and APIs, or really protocols, where different pieces of software communicate with each other and value can be exchanged, which was not something that was thought of like in the original internet. We've got email and HTML, and there's no payment built into that. It's just protocols for exchanging information. So I don't know if anyone knew that we were going to have, tens of millions of people on certain websites at that point in time.
Crazy.
But if you embed the value exchange into the protocol, you can basically say, let's have a marketplace where any supply provider not only offers the compute, but the payment of that compute is embedded in the protocol as well. And that's where blockchain is really powerful. But to do it, you need blockchain because it's also a consensus network to enable peer-to-peer. So a somewhat long, but not long enough explanation of like why blockchain is the enabler. And just comes down to, there is no better technology for having a peer-to-peer network of supply providers and those who need to consume that supply, and having a market-driven economy for access to that resource.
This is fascinating. I love this comparison you make to energy, because it almost feels like energy going into the grid was like a proof of concept for decentralized compute. So I love how you're doing. If we had to visualize this for a second, and I'm not sure if you guys have posted any visualizations of this, but if I had to think about it, it's kind of like an order book where you have, hopefully millions of people coming in and placing different ask prices for their compute. And then you have supply side come in, people that need this compute, and actually bidding up this to find a fair market value. I don't know, maybe just give me a visualization of how that looks for the people that are maybe a little less technical.
Yeah, I think you've got it right. So worker nodes are on the network and they really just supply compute. And the analogy you just gave to energy, I think, is a pretty good one. And just in terms of thinking about it, there are differences between energy and compute for sure. But like it's like having solar panels and selling your kilowatt hours back to the grid. And the order book determines what you price it at. So what are the differences to energy? Well, one is that you're not using an order book. It's not truly a market economy. You're going to get whatever the local power company is willing to pay you, or more often than not is forced to pay you because they don't really want to pay you. They just have been told they have to through regulation. Another big difference is like energy has transmission loss. It's not really something that can be fully decentralized in the same way as compute can, in that you can have a game server on one side of the planet and a game on the opposite side of the planet. And depending on latency conditions that you're willing to tolerate, that may be totally fine for the majority of games. In other cases, you might need lower latency, more localized servers that are faster to respond to requests. So that's kind of a difference with compute. But the big thing with compute is just far, far more decentralizable, in that the compute providers are essentially generating compute, offering it back to the compute grid instead of an energy grid that can be then drawn from by a variety of applications. In our case, games, is where we're focusing in on that.
Can you have like when I look at the supply and demand metrics of this, you obviously need a balance of both. Can you have an oversupply of compute?
You can. That's the problem with DPIN generally, right? So like most DPIN projects don't have demand when they boot up. So they've offered all these node incentives and lots of tokens on the supply side. And they just assume that because you put a bunch of supply out there that the demand arrives. But the world doesn't look like that. I mean, now you're on one of my critiques of my own industry here in blockchain, which is like there's too many projects that are solutions in search of a problem. There's too many things that focus on supply because it's like the token generating side. And then they just dilute their whole token distribution before they have any kind of intelligent ratio of supply and demand. So, I mean, the only real answer to that is, as we grow the network, we have to do it mindfully. We haven't gone out and spun up a bazillion nodes that are going to mine the token just for the sake of mining the token without delivering the actual needs of these games. And that's an advantage we have, starting with 2.5 million players on the network last month and 10 billion API calls. And it's growing pretty consistently because we've got more and more games adding to the compute network every month. So ultimately, though, it is like a supply and demand thing, in that if there's an oversupply and you have a market economy, it's at least self-correcting, because some people will decide to withdraw from the market because it's not profitable for them to do it anymore. And that's also okay. We just want to be a little bit mindful of like not booting up a whole bunch of supply that can't actually get utilized. But the nice thing about this, though, is you're still pricing according to those fungible units. It's not like you have a bunch of servers and people are provisioning them, or they're just sitting there waiting to be provisioned. You can always reallocate them to something else, and we dynamically utilize the compute capacity of these servers. It's another thing in DPIN. Like, and this isn't a general criticism of DPIN or anything, but there are different approaches to the problem. I think there are DPIN where the piece of equipment that represents the physical piece of the decentralized physical infrastructure network is essentially only used by one customer at a time. Ones that can be more fungible than that, who can essentially spread their supply across any number of customers who can utilize that, I think they're actually in a much more capital efficient build out, because now you've got a much higher ratio between supply providers and demand providers. You don't have to like lock up a machine for exclusive use for a period of time. Although there's uses for that too, like there are uses for that, but at least in our design, we think we get to the most capital efficiency by thinking of it as a fungible energy-like resource.
Like Helium found this out the hard way. So Helium had this like decentralized, before DPIN was even a thing, Helium put out these like LoRa LAN units. I deployed like 100 of them. And it was like no one used it, right? It was like, okay, we diluted our token. The H&T token just kind of went to whatever. Luckily, they came up with 5G and like build all these cellular, partnerships and kind of their network. But I'll talk about the demand side a little bit. I used to run a little gaming studio, and we used to rack up, 4 or 5K a month in AWS services, which were, kind of significant for us as a startup at the time. AWS makes tens of billions of dollars. Riot Games wrote that they saved $10 million going from whatever service they had before to AWS. So maybe my question is more on the demand side. Like, you have 2.5 million players, 11 billion API calls today. Do you have demand already? Like you mentioned some names, but like, what do those contracts look like? How much money are those studios putting or paying you as maybe a business today? And I guess what kind of demand do you think that'll drive for a token?
Yeah, so a few things to unpack there. So first of all, with Helium specifically, I have my own live stream. I had Amir, the CEO of Helium, on it just several weeks back and asked him,
amazing.
What's hard about your business? And what he said is the stuff that all crypto companies kind of think of as boring, like customer acquisition funnels and marketing costs and things like that on the demand side. Like crypto startups are usually pretty good at go-to-market, like token demand gen, but actual customer demand gen, not so much, unfortunately. So I think that is changing with DPIN in particular, because people do come from a lot of vertical domain expertise and having built other kinds of businesses before entering crypto. And I think that's actually a strength here. On the demand side, the cool thing with us is like all those games that are already under Beamable, we control the way traffic to various servers happens there. So we can route it to the DPIN network, which means that we can onboard all of this traffic. We'll tell them what we're doing. We're not keeping anything secret, but it's not like we go out and like get a sign off every time, because really all that they care about is, do we fulfill the SLAs?
And are the SLAs being fulfilled by something in existence today?
Yeah. So Beamable is a platform today that runs, and today it's running off centralized capacity because we built it initially around Amazon. So Amazon does work most of the time, and it's worked well for us for 99.9% of the time, and we've fulfilled those SLAs. And Amazon will continue to be providing node capacity in the DPIN as well. The difference there, though, is Amazon's pricing is a lot higher than a bare metal service provider. But you need a range for a truly liquid model for compute. You need a spectrum of different providers. You need the bare metal service providers that can offer compute affordably, as well as like the hyperscalers are still going to be in there pricing at a higher level because they can sustain the biggest spikes. And sometimes you need spikes in usage when it's necessary to do that. That said, our vision is that as we have more and more and more bare metal service providers, you end up with the equivalent of a virtual hyperscaler by aggregating.
Right. So you've acquired the customers today, maybe you've used Amazon, but you have the contracts with the customers today. And now you're trying to say, okay, can we roll out this kind of decentralized version of AWS, slowly transitioning them to something that is decentralized? That's the playbook.
That's exactly right. And the business model is very different because it's usage based when people come to us. So versus you go to Amazon and pay the $4,000 or $5,000 a month. Yeah. Which, by the way, like you can spend so much more than that on AWS.
I know. And it would jump to like 15K because we ran some AI model and didn't pay attention for like a week. So
And that's also part of like our story to game developers too, which is we bring them so much more capital efficiency. So in the typical setup, first of all, on Beamable, it's free for a certain level of usage that's adequate for developing your game. I don't know of any developers that have gone beyond the free capacity of 500,000 API calls per month that we just give everybody to use. So what that does is you could build a game essentially with zero back-end cost until it actually starts to scale. And the idea is we win together. When your game hits and it has zillions of users, you'll start paying for usage in direct proportion to how it's being used, as opposed to have to be a CapEx IT provisioning expert thinking way out ahead of how to like optimize your cost around dedicated reserved instances and things like that, which just gets complicated. So
so your existing customers are pretty excited about moving to this kind of new format, or will they even know a change? Like, surely they have to. Do they know kind of that Amazon is maybe under the hood to a certain extent in their SLA, or is it totally abstracted? It's just Beamable network. That's who we deal with. We don't kind of know what's behind the compute, and it doesn't matter if it's AWS or a decentralized network at that point that's behind the compute.
Yeah, I mean, we're fully transparent. Everybody knows what we're doing, so there's no secrets here. It's not like we're stealthily putting them on chain with on-chain compute, and they don't know. Like we're pretty out there with everything that we're doing. Ultimately, game developers are very pragmatic, and they care about things like what's it cost, what's its reliability, and we have to prove that. And I think we'll be under the microscope as we shift more and more traffic over to DeepIn, because they'll want to confirm that availability level and the performance and everything that they're used to is still there. So they'll definitely call us out on it. And believe me, like when you're in live ops for games, we get that 3 a.m. in the middle of the night call like, hey, there's a problem with my game. And we have to be there to help. So if it doesn't, we're going to be the ones sharing that pain with them and then having to fix the problem, because there would be an economic consequence.
But if you guys are successful at doing this is a huge market opportunity. I mean, these studios are dropping millions of dollars on this infrastructure.
Can we talk about the market opportunity actually for a second? Maybe, John, you probably have the numbers better than us, but just give us an idea of the market, the total addressable market, the TAM here.
So I'll just start with the size of the consumer market. So gaming, video games is about a $200 billion a year market. So that's not the part we sell to, because you have to make a game to do that. But what we see on average in the industry is typical publisher, typical studio of a live game, meaning a live service online game, is spending 20% of their top line out for infrastructure cost. So when you combine that with the fact that roughly 95% of revenues generated in the industry today are live services games, we get to about a $35 billion a year market is infrastructure, compute. And there's lots of data out there, like very easy to public check against like big game publishers. Like Roblox is a good example. Roblox last year spent like $1 billion on infrastructure, just them. And at one point they were spending 40% of their top line. There's a weird reason why that's true in Roblox, which is nobody cares about optimizing their back end on Roblox, because they just throw it out there and whatever happens, happens. But they invested in a lot of optimization. I think they got it down to 27. Don't quote me. I'll have to check the latest quarterly, but I think it was down to 27% of their top line was going out the door for infrastructure costs. So if Roblox, with their legions of software engineers and developers, can't get it a lot lower than that, your indie startup or even big publisher is probably not going to have a lot of success doing that either. And I've seen those costs kill startups. I've also just seen like reliability fail too. Like it doesn't even become a cost issue. Like it just falls over.
I got two questions on this then. Number one, do you see costs going down with all these, NVIDIA blue chip companies building out these data centers? And do you see too much saturation coming to the compute market anytime soon? Obviously, they're doing it for AI mainly. But I don't know, just thoughts there.
Mhm. Yeah, well, they're doing these big compute centers because AI training has to be done essentially with co-located GPUs because they need super high bandwidth memory and a bunch of other stuff to actually be able to do training. Because decentralized training is at least currently still very, very hard to do. So yes, that's GPUs. CPU-based compute doesn't really have a use case for that level of concentrated data center build out, and that kind of capacity is not what they're putting into like XAI's Colossus, for example. Like that's just tons and tons of GPUs co-located for training. And once you get outside of the training use case of compute, even GPUs can be highly distributed. So inference works great in a decentralized architecture. In fact, I think it'll be the most economic way to distribute AI inference because we're all sitting around with like these devices, which are actually great AI inference engines. So why not do it off that? Game servers is almost entirely a CPU bound activity, CPU and storage. So it's another one that really benefits from a lot of distributed compute networks, particularly if you build it around fungible units.
So generally, you're not too worried about saturation coming from these blue chip companies building out these centers.
I mean, the demand for compute is so high right now.
Yeah.
Like, I'm not worried that they're overbuilding. If anything, it's being underbuilt, especially on a global scale. Like right now, if you look at even like those massive GPU centers, those are only being built in the US. It's not being built internationally.
China's trying to build, I think, 60 gigawatts worth of
in aggregate.
compute out in Western China. But we'll see.
In aggregate, though, for the most part, like it's lots of data centers combined together. It's not like campus grade data centers like Colossus is, at least not yet, but they could certainly get there. But
the compute that's running games, because on your device, like on your gaming computer, it's obviously a GPU. But what you're saying is these are CPU based.
It is.
Okay, I didn't know that.
Yeah,
I thought it like for some reason it's like graphics cards in the cloud, but yeah.
No, it's not GPU. So there are GPU use cases in gaming, but it's more around pixel streaming. So like Aether, for example, is a good example of that. And Aether actually is a partner who's very complementary to us. We go to market with them all over the place because to operate a game in what's called cloud streaming, you need the pixel streaming capability, which basically means you have GPUs in the cloud that are generating the gaming front end and then streaming it to the user in kind of like what we're doing right now. You're using video stream tech to deliver the content to the recipient, but you're generating the frames of the game in the cloud on a GPU. Even if you do that, you still need game servers. You still need things to deal with persistent state, interpret rules, things like that. And that part has the same scaling requirements, whether or not you do cloud-based pixel streaming. So pixel streaming seems like there's quite a few projects going after that at this point, and we feel complementary to all of them.
So maybe we can pivot here, touch on the token a little bit. We didn't get the full team. You have a big company here. Maybe just give us an idea of the scale of the team, because I don't think we touched on that. So real quick.
Yeah, not too big, but big enough for where we are in our development. But we've got 35 people. It's almost all engineers and developers. So that's the company side. What else can I tell you about?
No, that's good. Maybe just your thoughts. Do you plan on keeping it pretty lean? Is that something? Obviously, we see bloat being an issue in these big companies. But is your mindset just keep it lean, move as a unit? I don't know. What's your mantra there as a team?
Yeah, well, I mean, another comparison to the way we're thinking about it is this is more like this is an Airbnb like business model for compute. Like we're not going to own data centers. Mm-hmm. Other people supply the data centers, and then we kind of Airbnb the capacity off of them. So we're not going to bloat by trying to also become a data center company. That would actually just be contrary to the whole idea of building a decentralized compute network. Where we need to emphasize our efforts is on technology. And there's kind of two main sides to that. One is the game developer SDKs. because we always want to be the number one easiest way that a game developer can build any backend. Because the reality is game developer, like we kind of talked about this during the show, but like game developers don't care about blockchain. They don't care about nodes. They don't care about all this stuff that like we're talking about on the show. They actually only care about, am I making a fun game? Hopefully that's their number one aim. Am I making a fun game? And then how do I get that fun game out the door faster and more capital efficiently? So regardless of everything we've just talked about, we can only win if we're the very best way that any game developer can build a backend for their game. And one of the key things we've found to do that is give people an SDK with a very easy workflow, plugs into the tools, the languages, the patterns that they're already familiar with. And that's why the 100-ish games that have already launched on our platform came to us, because we made that piece easy for them. So that's one half. And then the other half is really the protocol itself. And we know that it's important for us not to build all the back-end tech that could ever exist for game developers, because there's just too many things. And that's why, again, we're focusing on a protocol and hosting not only the game server logic that you need, but we think there's a whole market out there, an emergent market of people who build solutions or pieces of backends to games that could be crowdsourced and shared across a community of developers. We don't want to build that. We just want to open it all up through open source and an open network to add your software to the ecosystem. And part of the protocol that we built, the vision of the protocol, because we actually have more work on this marketplace piece, is to be able to have software modules that you supply to the network that can run on the DPIN, and you could apply either a royalty fee or a licensing fee on top of it for games that want to incorporate that into their back end, which, by the way, is a very familiar model to the front end, like people who build in Unity, Unreal, et cetera. Like they have lots of things that they can access to help accelerate the front end. That has never existed on the back end because it's hard to create a flexible business model that actually allows for payment, because back-end code has to scale up and down. So you add all that complexity of like usage sensitive stuff on the back end. And that's something that we see as also a role for DPIN.
So on the note of DPIN, we see a lot of DPIN tokens launch, and most of them suffer tremendously from inflation. Maybe give me your thoughts on your token, how you kind of are planning to avoid inflation, if it's an inflationary token at all, and some of the use cases and utility here to keep this ship sailing.
Well, the big picture is we want it to be a deflationary token, and we do that by having a model that aligns the underlying business KPIs to the way the protocol works and using. So let me take you through it. So when API calls are delivered through the network, that's a revenue event. Like API calls are not free. Nodes operate on the network to earn from offering API calls of capacity. So they get paid for that. They can get paid in either beamable token, which we incentivize by keeping the fee structure super low, or they can pay in stable coins, because we think a lot of game developers, again, they don't want to think of token-based pricing. They want to just go with what they know. If you pay in stable coin, there's a higher fee, 15 to 20% added on top of it. So what that then does is the 15 to 20%, we're earmarking half of that for buybacks to take token back out of circulation. Now, in the early days of this protocol, the percentage and like the impact on that from a float and circulating supply standpoint, it starts small, but as the network gets more and more used and you start to see the API calls go from 10 billion to 100 billion to a trillion, and it's generating revenue, then it starts to become really, really significant. So there is a period of, distributing tokens to people as incentives to stand up nodes and checker nodes and things like that to get the network off the ground. I think we've been mindful of the supply versus the demand piece, and to actually have demand present on the network. But the big picture is really just have a protocol that drives deflation of the token according to actual revenue-based utilization of the network.
Do you guys have a tokenomics sheet out yet that I can look at? I'm on the website here.
Yep, you can go to if you look at the white paper, it's inside the white paper. There's a token section.
Sweet. Oh, okay. And so then to recap that, so you have two payment options. It's either stables or the Beamables token. And then if someone pays in stables, 15 to 20% of that, which is the margin, basically the difference, will go towards buybacks. And then are those tokens burned or kept in treasury? Help me understand that.
So in the early days, we're keeping them in treasury. Ultimately, we would expect to burn them, but as a brand new protocol, I don't actually believe in launching right into burn too aggressively, because the fact is you don't know enough about the total dynamics of the network in those early days. And we could use it for things like incentives to developers to get on the network and things like that would fuel the flywheel a lot more. But yeah, I think that seems to be the most proven model for DPINs that are actually operational over a longer term, like a Helium is, I think, now discovering that when you do the burn model, that it actually is the thing that can drive token value accrual over the long term. Yeah, we're talking about things that are like deep down the roadmap of the life of Beamable as we roll this thing out, but that's where we would expect to be.
Okay, and then one more question too. With the stablecoin payment being 15 to 20% higher, are those prices still competitive with competition?
Yeah, so the answer is yes, because if you look at bare metal service providers, they're typically pricing 50 to 70% less than a hyperscaler anyway, and bandwidth is actually even much less than that, like 90%. So the underlying CapEx and even sort of the operating fees that bare metal service providers offer to customers is quite a bit lower than hyperscalers. Now, why aren't all people just on bare metal service providers? It's because there's a lot more complexity, right? So you still have to build a lot of things that automate and get people on the network and onboard them and potentially even distribute demand over multiple data centers, which is the whole point of having the protocol here, is automating a lot more of that for everybody.
When you say bare metal service providers, are those just people with data centers that are not AWS?
Yeah. So when you go to AWS, you not only get access to computers, but you get tons of like other software infrastructure and services and things that are all built around
value-added stuff. Got it.
Yeah, and they're great. They do things, and if you don't mind kind of getting more and more locked in over time, which is what they built their business around, then they work great. But bare metal service providers are basically racks of computers you can rent.
Fair.
And then it's on you. Like whatever you want to do on those computers, you load it up.
Yeah. I see here you have 28% investors. Did you guys do private funding rounds? Like what's kind of the funding backdrop for Beamable, the company?
Yep, we've raised 23 million in venture capital in the company. The last round was led by Bitcraft, which is pretty well known in crypto as well as gaming. All those investors and the core team, which includes me, we're all on the same unlock schedule. So in a year, the first 10% unlocks, and then it's linearly over 24 months after that. So we've got a 3-year time horizon to be there, creating a lot of value in the network before we really see anything.
Dom, I don't know if you unmuted there, but yeah.
No, this is all good. I think we have a really comprehensive understanding of what you guys are doing here. Interestingly, staying on the gaming side, we talked so much today about AI and compute for that. So it's interesting that you're not focusing in that direction. I think we understand the token, we understand the team. I'm pretty good on questions. John, I know.
Last thing I would ask is you have Meteora's logo there. Can you just describe the relationship with Meteora and how you're launching? Sorry, Don.
Yeah, you're good.
Yeah. High level, we think of ourselves as an internet capital markets product. Like we've talked about gaming and DPIN and servers, but ultimately this is about creating a new capital structure around compute as a resource and making it tradable, aligned to market forces for pricing, all of that stuff that we've kind of touched on. And we've just found a lot of alignment with Meteora in that vision. So we're eager to continue working with them to create the capital structures around that. And we'll have some liquidity on Meteora after we launch the token. as well as other places. And we hope to talk more about some of those other places
Ooh.
really soon. Yeah.
Feel free
Follow
to
me.
just drop it all right now. Forget
Yeah,
the
no,
roadmap,
like,
forget the
that's
schedule.
fair.
Just
I don't think I can without those people saying, okay, we're good to go, but we're very close. Yeah, I think even
The rule in MCG is if you start talking about it, you got to finish.
will bring me back. I'll bring
there
you
we
back
go.
to the
There
next
we go. We
episode.
can do that.
How
Are you going to
much
be in
are you
Abu
trying to-
Dhabi for Met
Of
Dhabi?
course, yeah.
You said yeah.
Yes, of course. That's the breakpoint event of the year. So we're
Okay.
going to be there with all our buddies from Solana and Solana Gaming and
We'll see you.
Mixes and Metaplex and etc.
Yeah.
There we go. We're excited. We're excited.
Yeah, we're also going to be there hosting some stuff. But sorry, I don't think we asked this, but how much are you trying to raise or looking to raise?
2 million in the token sale.
Okay, that's not like crazy or
Yeah, it's not insane.
It's pretty
What
modest.
would that put the valuation at? At what valuation?
2 million FTV.
Okay, cool. All right. I think that covers it. John, thanks for coming on. It was great talking to you. Pretty interesting stuff here. So we're going to have to be tracking your development. And like you said, we'll get you back on when the token's launched and things are, smooth sailing.
And we'll see you in Abu Dhabi.
From
And
your
that's
lips
right.
to God's ear. Thanks. Yeah, it's going to be an exciting couple of weeks. Thanks for having me on.
Take it easy,
Cheers.
John.
All right, take care.
Good community here, man.
Yeah, dude, the community showed up. Not gonna lie.
Yeah. Here we go. We'll clap it up. A little pat on the back for you guys.
Yo, BMB community, Beamable Network. Yo,
Well done.
good shout out to you guys. Love
I
you
will
all.
say, and I'm pretty impressed too, because it looks like John's been on like a media campaign here recently, just for the rollout. So you guys are
Yeah.
coming strong to everyone. Like, we love to see it.
Yeah, and thanks for having MCG as part of the media rollout. Like, let's go. I love that.
Perfect. Josh, maybe some thoughts, man. Maybe some thoughts.
Yeah, I mean, I've run a game studio and I've paid some massive AWS bills from an indie studio perspective, and I understand what he's doing. If you can reduce those costs and create good reliability and have a solid interface to see what you're spending, what you're doing, troubleshoot stuff from a technical perspective, I think they have an opportunity to do something interesting here. I also like the approach of, I know he said he uses AWS as back end now. So you kind of have to have existing customers deliver that service as they would expect today, and then move them off it. Versus, I think the challenge with like Helium and stuff is, how do you solve the cold start problem where you have no service today? You're trying to spin up supply, you're diluting your token thing, and then you got to go convince people to buy the service. Whereas they seem to already have kind of the service in place and a real business in place today, and it's just about, all right, can we migrate that over to a decentralized network and then drive demand for the token? So that to me seems pretty interesting.
Yeah, it really hit home. He made two references. He said, we're kind of like the Airbnb of compute, and then he said this is similar to a power grid, how energy goes into the grid and then it's tradable after that. People can buy. And I think both of those kind of hit home and resonated with how this decentralized compute is coming together and how it really could take shape and take form in the future. And it starts with people just stepping up and doing it at a high level. So
yeah,
we'll see.
The TAM for this is massive, like hundreds of billions of dollars is paid out. And I don't know what Warzone or what like Battlefield 6 has for their compute back like cost, but I'm pretty sure it starts with a B.
And help me and remind me if I'm wrong. I think John even mentioned like, hey, because we have this decentralized structure here, like if there is an outage somewhere, we can kind of fill that gap with everyone else. So it's actually more stable than something like AWS, which we saw their outages recently really caused a ripple effect within the entire, with just everything. And so he said, well, that's not really a problem with us, because if something goes out here, we have all these other people to fill it, ASAP. So I think that's I don't know. I don't see why we don't head in that direction in the future. I'm not sure how long.
I think the challenge here is, he mentioned AWS has a lot of value-added services. There's a lot of layers of software and technology that sit between the physical computer sitting on somewhere and the person that's using that compute on their phone or on their computer playing a game. So there's a lot of technology between that. And what AWS probably had was something in between there broke, and then it just kind of rippled across the network, and then the network went down. They're going to have the same challenges of, that middle layer of software needs to be bulletproof to really make this work, where you basically, if Buddy all of a sudden has a power outage on one part of the network, it's like it can be filled in by other parts of the network. And that has to be seamless. That has to happen in real time. And the spikes in gaming are real, and the drawdowns of compute are real. So yeah, I mean, this isn't like this is a big problem to solve, but if they do figure it out, it's worth a lot of money, like a ton of money. AWS is, other than the other hyperscalers like Microsoft and Google Cloud, like they haven't had like a serious competitor, kind of indie startup make it like this. So
No.
we'll see. But
No.
Olive had a question.
Yeah, Olive, Dom, is there any shot I can get your take on the belief situation? I'd love to give my take. I can transfer over to this.
What's the Olive? What's the belief situation?
Well, just a token going to go into the depths of
going to.
Yeah. Let's see. Yeah, so this was I did have these buy zones set up. Man, the thing about Believe is they come back, and I don't think this is the end, right? I don't think this is the end of Believe. I think they got a lot in the pipeline that they're working on. But they kind of come back, they hype up this whole situation, and then the first token that launches, seemingly partnering with Believe, because Believe then promoted it right after. It's like one of the first tweets on their new refreshed Twitter account, is Curobeasts, a 2020 gaming NFT project that's just kind of washed up and no one really uses. And that's not a diss at Curobeasts. They're welcome to come on and make their piece here, but that's what it looks like from the outside. And like as the first project launching back on Believe, it seems to be a little disappointing, right? Because people thought they had a lot of really good lineups ready to go, and Web 2 projects specifically, like a Web 3 gaming project, NFT project, I should even say, is cool. But again, it feels like they're maybe just milking the community here rather than launching a Web 2 project like a Dupe, like a Fitcoin, like a Clad that brings that Web 2 value into Web 3. So I'm cautious. I can't say I'm super optimistic. I am buying Believe. But like Josh said, I'm sizing in slowly and to a level that doesn't put my portfolio at jeopardy, of course. I hope that goes without saying. But they got a lot to prove. I think this was huge for Pump Fun. Again, what's Believe's real mode here? Believe's real mode is bridging that gap between Web 2 and Web 3 and having great launches, as is for any launchpad. And so I think it leaves the door open to someone like Pump Fun, because Believe has no real intrinsic utility, right? These devs could get up and walk away any second, and collect those fees and leave. Pump Fun could do the same thing if they put some good groundwork in and got some Web 2 companies to launch some good projects that people really want to bid to launch. So the door's wide open. Believe is in a scary situation right now. If they can't switch it up, I think they got some issues. I think they should change their model personally. This is a hot take, and I want to talk to Ben about this if I can get in contact. I think Believe should change their model in a way where they still have the 2 transaction fees, but these devs are making 6 figures, some 7 figures, and they can get up and walk away in any second. I think they should actually implement a Futarki situation, a decision market situation like MetaDAO has. And so let's say they have these 2 buy fees, right? 2% in, 2% out. They make 4% on, every transaction, the full loop, I should say. And then half of that should go into a treasury where the community kind of gets to decide and vote on what to do with it. Because right now, these devs can just take the money and walk away. I think there's a lot more incentive alignment for devs to stay and talk to the community and do what the community wants if half of the fees that they're getting are locked up in a treasury that the community decides on, right? And again, they have to request if they want to outsource development and buy something more, they're going to have to request it from the community. I really like MetaDAO's structure, but I do think there's a mixture there. I think the fees are very nice, especially for startups and just ideas who need that bootstrapping and that money. And so I think the fees are great. I love it. But I also think there should be more alignment with the community. And that to do that would be maybe a piece of those fees going into a treasury where there are markets and the community kind of decides what to do. Because again, you have these situations where devs come on, they're here for the launch, and then they go silent for weeks. Okay, well, if they want to claim the piece of that treasury that they've earned from fees, they have to go through the community. They have to be active with the community. And so that's, I think, a change I would see Believe implementing that could be beneficial. Anyone can do that. It's not just Believe. Pump Fund could do that for all I care. I mean, it's up for the taking. But if Believe can come back, launch some really good projects, that's ultimately all that matters. Their flywheel turns if they get good launches. Good launches equal more fees. Flywheel makes money, goes back into buybacks. So to answer your question, Olive, I have been buying Believe. I'm cautious right now, but I know they've been working hard. I think what it might, I don't think they're going anywhere. I'll say that. So I think what it might take is like rock bottom. Frankly, they've put a lot of effort and time into building out this mobile app. No one cares about a mobile app. To put it like that, we are actually seeing mobile apps start to pop up, but right now, no one really cares about a mobile app. And I think they're putting a lot of time towards things that the community doesn't really want. And so it's going to take potentially Believe falling flat for a while, Ben to kind of get ego checked, for them to come back and say, okay, we want to listen to you guys. This is a Web3 product. What do you guys want? We'll build it. And that's when things might turn around. So
maybe pull the tweet I have there. I mean, I could pull it, but then y'all see my white Twitter account. So
oh yeah, no, thank you for sparing us on that.
I want to spare everyone's eyes from
Yeah.
having a. I don't know how to turn dark mode on, but I will figure it out.
You know what? I can walk you through that. Yeah. So
Yeah.
so this is the tweet, right? Kurobees put
Zoom
out their
in
token,
if you can.
which very interesting model here. This is not one we've seen on Believe, where it's only 12.5% was going through Believe launch, 25.5% claimable to the community, but then the rest is to team, VCs, early investors, whatever, NFTs. And so it's an interesting model. Yeah, 57.5% non-circulating. They kind of set up a special model for Kurobees here. And I don't know. It was just kind of weird because the FDV to market cap ratio was, I don't know, people were confused for a while. But then on top of that, Believe just came out and promoted it. And again, they probably planned this launch, but I'm not sure. They got Stig, who's a Web3 native. Surely he saw Kurobees and was like, man, this isn't the best project to launch as like a kickoff to the new flywheel. A dated NFT gaming project that couldn't put out a meaningful game back in the NFT days like everyone else promised, and now they're launching a token. Like, surely Stig saw that for what it was. And again, I'm not trying to be hateful. I'd love to hear from the Kuro team themselves, but like, this is just what people see from a surface level. But Believe put out this tweet. Kuro is now live on Believe. They're behind some of the most viral on-chain entertainment, best known for their game, Kurobees. The game has over 1.2 million players, 350K connected wallets, 700,000 social followers, 4 million revenue, which like they do actually have pretty good numbers, but I'd love to check on like when those numbers are from. And 10 million plus in secondary trading volume from their NFTs, I would imagine. We've gotten to know the team closely over the past few months. They're serious crypto native builders who are aligned with long-term futures of the space. We're confident Kuro is here to stay and scale even bigger on Believe. I'll also note this. Kurobees has been hinting at launching on Believe forever. Like for so long. It was like a sniper fest if you were paying attention. I had them on my CA watch list. I knew they were launching on Believe months ago. So snipers that are, very technically skilled could have easily had some limits at. And then I think there are people launching fake tokens before they launched. Clearly, there are some people that knew that this was coming. They, I think, hinted a day before on their Twitter account that something about a token launch coming soon, which obviously lined up with the Believe flywheel. Let's see. Can I find it? 17 hours, 18. Keep going. The token lives on Solana as part of the, nope. Today, 4 p.m. Eastern Time, a snapshot of a whole. No. Excited to announce we have secured Kurobees handle. No. TG and game coming soon, right? So they were just hinting at this TGE. Again, anyone with some technical sniping expertise knew that they were coming and could deduct that they were going to launch on Believe.
Did they have a token from before or no? It was just an NFT /
Just the
gaming.
NFTs, as far as I'm aware.
They did mention in that thread there that they chose Believe because it created the ICM meta, which is kind of, you can't count Believe out because they're kind of the category leader too. So
look, and this is what Twitter wants. Like, this is what everyone wants. It's undeniable. It's kind of crazy the shift we've seen recently. Twitter wants ICM to succeed, ICM to win, and now it's just who's ready to capture that market. So I don't have much more to speak on with that, Olive, but interesting. Crypto Kuba said exactly they should look how virtuals turned the whole situation around their token. Yeah, I think people were disappointed about that as well. Like, they spend months and months finalizing this token flywheel. And by the way, 100% flywheel is awesome. Like, come on, guys, you can't beat that. That's hyper liquid. Like, that's as good as you can get. I think people were expecting more of a virtuals pairing, pair your token to Believe to see it do, in order to launch and have all these different functionalities for the Believe token. So I think when people saw, oh, it's just a flywheel, they were a little disappointed. However, it's a great flywheel. Now they need to generate revenue. They're not making much revenue, so the flywheel can only spin as fast as they make revenue. And people are like, well, all the revenue came months ago. And so where's the retroactive fees when we've been waiting for the last couple months? And that's a valid concern. They have mentioned they're going to do that though, so I wouldn't worry too much. But they've already done 1,200,000, I believe, in buybacks, and I'm sure more is going to come. They got pretty big war chest. So Olive says, and dude, what's up with these comms? Also saw Taylor responding to a business influencer trying to help him build a business with him. I am really questioning if these guys are serious about Believe. Yeah, I don't know what you're referring to there, but I believe they're ready to pick up comms soon, but they just got to do it. They just got to do it. Your word only goes so far, right? You have to actually do something at some point. And they've been saying they're going to do it for a long time. So it's time. But we're going to keep it short today, guys. Markets are pretty brutal. Bitcoin's at 106K now, which is crazy. Market's tanking. Not much to talk about. We're going to go touch grass, get some business done. But outside of that,
we have to maybe Addicted just said that day 3 or something is up. Anyways, weed is like pumping right now, so I don't know what. Are you playing day 3? Or
I am. I'm alive on one of my
alive?
accounts left. One of my accounts, but my account that's alive is like pretty trash. So we'll see.
What's like? Give us the TLDR of what what you're actually playing right now.
Here,
Is it just doing little challenges or?
Yeah, right now it's just little challenges like Squid Game style, exactly like he explained. And let me just pull up.
Can we do a little quick Addicted segment just because this is midstream and it got fudded pretty hard. People like totally just kind of checked out on this, and day 4.
Okay, so let me connect my wallet, see what's up with day 4 actually.
Not gonna lie, I fumbled my weed bag, just got shaken out like a.
It's not doing great though.
No, I know, but it's pumping right now.
But pumping off a dip's one thing, right? It's like if you drop 50% then pump 20, is it really like?
No, but we're pumping like 60, 70%.
Let's see. Okay. So yeah, up until this point, Addicted's been like these Squid Game style games. So pick a number 1 through 3. If you pick what the majority picks, you're eliminated. Pick a weapon. If you pick a weapon that the majority picks, you're eliminated. It's been very, simple games, to be honest.
Kind of the game is just being in the game, right? The game is the game.
It's social, yeah.
Yeah.
Okay, look, I passed. So I'm on day 4 now. I'm one of, let's see, 528 players, guys.
Can you show what it looks like, or like without?
I mean, not without like leaking my account, which I don't really want to do.
Okay.
Let me see. I'll tell you guys what day 4 challenge is real quick. Probably won't let you know what I'm doing because now it's down to 100, or 500 players. But let's see. Season 2, day 4, Green War. Mission: gather more weed, stack weed, or get wiped out. So why it's pumping is because people are stacking weed. Mission: gather more weed, stack weed, or get wiped out. Only the top 10 richest cartels survive.
Are you in a cartel?
No one's in a cartel, as far as I'm aware. Can I join a cartel? Let me see. I am in a chat with a lot of people. Let's see what they're doing. Okay, survive to see another day. Holy crap. Picked RPG and survived. Oh, let's go. Nice. I picked 1,500 attack thing. We got this, boys. Which weapon got eliminated? Okay, so can we join? Let me ask these guys. Can we join a cartel? So that's why weed's pumping, is because people are buying weed. And I'm assuming the last couple days are going to be very weed-centric. So it might pump a little more. I don't know, but that's just like, who knows. If I could, I wish I could show you this without showing my account. So yeah, day number 4 is day 4. It's green war mission. Gather more weed, stack weed or get wiped out. Only the 10 richest cartels survive. That's gonna really bring it down. It's gonna get exciting these last couple days, but also like very few people are gonna be buying weed. There's only gonna be 10 groups of people. So right now the leaderboard's
10
meth
people or
cartel.
10 groups of people?
I think it might be 10 groups. Can I join?
Because that seemed like what the FUD was about, was like there wasn't that many like individual players kind of thing. But I mean, yeah, we'll see.
Now the thing about this is I would imagine you don't want to just join the number 1 winner cartel. Sounds crazy. I feel like though there's going to be some twist to it. The top 10 cartels survive. Is that what they said? Let's see. Top 5 cartel groups survive. Yeah, so I feel like everyone could go just pile into the number 1 cartel group. But maybe if you're number 1, they're going to like have a battle between those guys or something. I don't know. This is just random thinking. So I'm actually going to try to avoid the top cartel and maybe get into like the 3rd or 4th or 5th. Which sounds stupid, but how do I join a cartel, man? I don't know. Well, that's your little weed update, guys.
There's
Let's read the
your
chat.
update.
Also do what's up with these okay, and then Crypto Cuba says, imagine if Believe built a platform where, for instance, holders/shakers could invest in those new launches and could see the projects enabled to access before launch. I actually think that's what they're working with their app, Cuda, where you're gonna have a belief score, right, based on how good of a holder you are, kind of similar to a cap table in VCs, right? They're not letting VCs that are paper hands into the cap tables these days, so I think they're actually building out a belief score similar for this reason, Kuba, which actually will be cool. So, all right. Well, that's what's going on here, boys. So
maybe last let's just wrap with ICM run, because I was a little surprised to see the sell off post announcement, but there was some dude that just like sold off like 25 million ICM.
The rogue whale, man, the rogue whale, like idiot. What is this guy doing? Let me share this tab. Yeah, I'm like, this is a buy for me. This is a buy. I'm actually like starting to wean low on stables though, and I'm not gonna use Solana to buy anything in this market. Little rule of thumb, guys, like when the whole market's dipping, you don't want to exchange one depleted asset for another depleted asset, right? So if Solana's down 5%, obviously in this case, ICM's down more than that, but if Solana's down 5% and then another token's down 5%, don't use your Solana to buy the same token because it's null, right? It does nothing. You use USDC in this case. So you need a stack of both for what it's worth, guys. You need a stack of USDC, stack of Solana. When the broader market dips, you use USDC. When a specific asset dips, you use Solana, right? Simple as. Yeah, this is a pretty nice buy, though, I would say. Again, like, I'll just give the quick thesis. We are sitting at 14 mil, sub 15 mil for ICM. They have over 1,000 people applied to their accelerator program. Only a very small handful are going to actually make it through. That means 1,000 people are going to get referred to different launch pads. A portion of the fees from these projects are going back to ICM. So ICM has a better flywheel than most launch pads. It has the most insane team: Elon, Luca, Meteora, Believe. List goes on. They have the best team in all of crypto, the best communication, the best pipeline in all of Solana. They have the best team in all of Solana, and they have one of the best flywheels in all of Solana. It's at 15 million. It couldn't be more obvious. It just takes a better market, right? The conditions in the broader market are bad. This is suffering from it. But realistically, once it comes back, this realistically should be priced no less than 100 million. No less than Believe, that's for sure, guys, right? That's for sure. So there you go.
Your thread went kind of viral. Do you want to show that real quick? I know you just talked through it, but
my thread went viral.
Yeah, your video. We got to get Speculation Dom's follower count up.
Did my video go viral?
Yeah.
I don't know, dude. Let's see.
Yeah.
Oh, 13K? Nah, dude. All my stuff gets that much. No, not really. I actually get great impressions, so I'm not gonna lie. This one got more. But yeah, let's what did I even post about here? Oh, it's a post about ICM. Yeah, it's so exactly what I just explained here, guys. ICM has the most valuable network within all of Solana. It's partnered with every major launch pad. They hand select. So think about this. Every launchpad, their very exclusive top projects will probably get incubated by ICM.run. ICM.run will have the opportunity to hand select those top picks. And then they also have this referral program, which is set to feed 6 figures in weekly revenue back to holders. That's more buybacks than Believe's doing right now. Maybe. And again, sits below 20 mil, 15 mil now, but pumps at 5 billion. Meta's at 185 mil. Believe was at 170 mil. They're partnered with all the big launch pads, all the ones that are launching, and this is at 15 mil right now. It's mind blowing. But you'll let me buy more at 15 mil. I'll buy more at 15 mil. It's that simple. That simple. You want to wrap on that, dude?
Yeah, I think that's it. We have one on tomorrow, which we'll announce. We'll get that tweet out ASAP this afternoon.
Should we? We haven't announced. Do we have Friday?
No,
do we want to announce it? Let's see.
Yeah, here. Just going to the schedule.
So we have.
Duels.
How come we haven't announced this? Yeah, we have duels.fun on Friday. Duels.fun, which is they are actually contributors to ICM.run. So duels.fun, I believe is their handle. No, it's not. Okay, yeah, well, we gotta announce that.
Yeah, we'll get that tweet out as soon as this wraps.
Duels.fun, gaming capital markets, lots of gaming. What's up with that? We're seeing lots of gaming recently, Josh.
I mean, not Axie Infinity led. That's not this time. Axie Infinity led the gaming bubble last time.
No one's leading it this time. Yeah, so we got Duels.fun. I think they got a TG coming up soon. This is kind of like a rollout for them. They've been doing spaces, similar to what Beam Bulls is doing. And we got them on tomorrow. Yeah, here you go. We have to quote tweet. We should quote tweet this, Josh.
Yeah, we're going to get that going. Actually, I'm going to do that right now.
Here, I'm going to actually send this in private. But yeah, guys, so that's the word. That's our Friday show. It's going to be a banger. Come on, listen, enjoy. Hopefully the market's a little bit better. We can be in better spirits. Yeah. So, Josh, any last words?
No last words. Thanks, guys, for showing up. Glad to see 2,500 on the stream. And yeah, go back and watch the pre-show with John's Rita. There was a lot, Jones Rita. There was a lot of, if you're looking at your portfolio and you're kind of feeling like, what should I do? Go seek his wisdom. I think it's timely and valuable, and make sure you show up on these streams. When we do trader spotlights or trader radio, we just do it to bring kind of a diverse set of viewpoints in terms of the markets on streams, so that you kind of get different ideas, and yeah, always take a little bit of wisdom from each of them. But yeah, see you guys.
See you.